Hello. Good afternoon, everyone. Hope everyone's having a great day. If you're in the DMV area, hope you're outside enjoying this awesome weather we're having out there. But don't worry, I'm still in here in the office making sure your insurance is good to go. So on today's insurance tip of the week, I want to cover a few things that I get asked a lot about how to save money on insurance. So, first things first, I've said it in multiple videos, shop your insurance around. If you don't think your rate is good, or if you haven't had your insurance reviewed in a while, it's a great time to take a look and see what's going on and see what you can do, perhaps with another carrier for the same coverage or better with a lower rate. But let's say, you already have a good rate, you're happy with your carrier, that's all well and good. How can you still save a few dollars? And today I'm going to talk about a few smaller types of coverage that can save you some money on your policy, but are still going to leave you well protected. And first thing I want to do is talk about the one type of coverage that you do not want to change, and that's your liability insurance. If you're working with a good agent, you're working with a good professional, they're going to set the liability for both your home and auto where it needs to be. You do not want to try to reduce that in an effort to save money. That's the most important type of coverage you're going to have on any insurance policy, and it's generally one of the more cost-effective dollar per dollar, so lowering that liability is probably not going to end up saving you too much money anyway. So let's take a look at auto insurance first. One of the ways you can save a few dollars on auto insurance is with rental car coverage. Almost all policies are going to be written with rental car reimbursement, meaning if your car is in the shop during a claim, company's going to pay for a rental car, no problem. Now, if you don't need your car day to day, or if you have extra cars in the household, i.e. some people have 3 cars in a 2-driver household, or let's say you have a young driver who's in high school and they can drive to school, but at the end of the day, they don't need that vehicle. And if one of your cars was in the shop or out of commission, you could take that car and drive it. You might be able to eliminate the rental car reimbursement insurance from your auto policy. Again, that's going to be personal preference. It can save you a few dollars. Secondly is going to be towing and labor. A lot of companies offer great towing and labor, which is basically insurance way of saying roadside assistance. So it's going to cover lockouts, towing, dead battery, things of that nature, for sometimes even less than AAA would charge. But if you have AAA, some people get it free through work, or they have another means of towing the vehicle. That's a coverage you might not need to have on there. Again, these are good coverage to have, but some people, they don't really line up with that. But lastly is your deductibles. Deductibles are what you pay out of pocket when a claim occurs, and then your insurance company covers the rest. Some people like to have a lot of cash on hand. If you're okay paying $1,000 or $2,000 if your car's in an accident, and anything less than $2,000 you're just going to pay for yourself, then that's your choice. And by raising your deductible from, let's say it was $500 to $2,000, you can save on your insurance. Again, that's personal comfort level. Me personally, I don't like to have that much cash thrown out at a problem. I keep my deductibles low. But hey, that's totally up to you. It's not going to make your coverage any less valuable. It's not going to mean that you have to pay out for liability and other things. It just means more out of pocket if an accident does occur. And a quick reminder, if you're at fault in an accident, you pay your deductible. But if someone else is at fault in an accident, you're going to go through their company. You don't have to pay the deductible. So keep that in mind as well if you're thinking about adjusting your deductible coverages. Lastly, on auto insurance, if you drive an older car with higher miles where the value of that car itself is very low, you can consider having liability only. If you drive a 15-year-old car with 180 or 200,000 miles and it's only worth $2 or $3 grand anyway, it might be worth just lowering to liability only. That would mean that if you're at fault in an accident, any damage to your car you're responsible for. But given the value of the car, let's say you have a $1,000 deductible anyway, they're so close it might be better for you just to have the liability only. That way, if you're at fault, your insurance will pay for people who get hurt, but you don't have to worry about paying for you would pay for your car yourself versus the insurance company paying. Saves you a few dollars. Now let's look at homeowners insurance. There's several coverages on homeowners insurance that I do recommend that my clients have and look into, but they might not fit everybody. I've talked about water backup before. That's going to cover when water that's supposed to leave your home through some sort of drain pipe backs up into the home, or your sump pump fails. Well, if you do not have a sump pump and you're on a septic system in your home, water backup isn't really going to apply to you because there's no sump pump to fail. And since the septic system is totally the owner's responsibility, if it backs up, that's still going to be on you. So if you have water backup and you don't have a sump pump and have a septic system, might not be right for you, probably coverage you don't need. Again, with deductibles, This is personal preference. So if you're very handy, or let's say, you have a really good friends with a contractor, maybe you set your deductible at $3,000, $4,000, even $5,000, because any damage less than that you're going to cover. And then big losses like a new roof for 20 grand, you pay 5, your insurance pays the rest. So that's an option for you. It's all about your comfort level with working on your own home or knowing someone who can work on your home, do their work right for a great value. Another way to save money on your homeowner's insurance is something that I've mentioned before, and that's making sure your home is insured to the right rebuild cost, the dwelling value. Oftentimes, when you purchase a home, the insurance company might write you a policy for the sale value of that home, the purchase price, which of course is going to be more than the rebuild cost, because any home, whether it's a townhouse or a single family home, you're buying some land. So that land has value. So if you're insuring to the sale price of the home, that's going to be more than it costs to rebuild. I've seen homes that are insured by 20, 30, even 50% more than they need to be. And that can be a really, really big savings. How do you know if your home's insured to the right dwelling value? You talk to an insurance professional. You can also look at tax records. The county tax records are a good indicator. Now, they're not always going to be accurate because they're looking at the value of your dwelling as it is now versus building it new, but they're kind of going to get you in the ballpark most of the time. So that's kind of a good barometer to check, but I would still talk to an insurance professional because we use county tax records, a cost estimator, and a lot of other factors, so that's going to get you a more accurate assessment there. So I hope those tips and tricks are going to help you guys possibly save some money on your insurance if you have some coverages that you don't necessarily need right now, or if you can adjust your deductibles to a comfort level for you, that's going to save you some money. As always, have a great day.